Let's talk about India. You've come just a day or two after we had some very good GDP growth numbers.
Yes.
Again, in India, people are asking a lot of questions of that data. Some of that data indicates that there is a discrepancy factor that's added considerably to that GDP number. If you look at the GVA number, it's at 7.2, considerably lower. Do you believe the Indian GDP data? Let me ask you that question.
Oh yeah, I definitely believe it. And I believe the Chinese data. You must remember, we're in a situation now where things are much more transparent. You and I can travel all over China and observe what's going on. And the same thing is true here in India. Governments need data that is accurate. And it becomes very apparent very quickly when the data is not accurate. If you remember the case in Argentina,
yes,
the government wanted to make up inflation numbers. It just didn't work. People were creating their own numbers and looking at what was happening on the ground. So I do believe that the Indian numbers are correct and the Chinese numbers are correct as well. In the case of India, we're now at the cusp of a real takeoff of the Indian economy. I think Modi's policies and stance and philosophy are going to start feeding in to the economy in an accelerating pace. And that's going to have a terrific impact.
Do you see these foreign investment inflows sustaining or in fact even accelerating or increasing?
I think it would be sustaining and maybe increasing, but in particular areas. In the portfolio area, they may not grow as fast as the direct investment area, if you know what I mean.
Okay.
And a lot of that depends on government policies regarding taxes and ease of investment. For example, as you know, with the short-term capital gains tax, it's somewhat a deterrent for portfolio investors.
Correct. At these levels, do you find the Indian markets interesting to invest in? And I know, I suspect you're going to say it depends on which company you're talking about.
Yeah.
But I was reading a few brokerage reports, and for instance, Kotak, which is a domestic brokerage, has mentioned that they thought that the markets were fully valued at this point in time.
I don't think it's run up too much. Actually, India's been held back because of the general emerging markets underperformance. You must remember, when the big investors come into these markets, they're usually buying a portfolio which includes India. If they're not putting money in, India will not get the money, just like China will not get it. So I think India has been somewhat held back because of the macro picture of emerging markets up to now. This, I think, is going to be changing, and you're going to see more money coming into India.
Okay, but from a stock
market
from
a stock point of view, valuations are still attractive. And if you factor in the reforms that are taking place and the impact that could have on earnings, then you're at the cusp of a very, very interesting opportunity.
You've traditionally been invested strongly in IT, in financials in India. Right now, which sectors, industries, areas do you see opportunity in, both from sort of a growth point of view and from a valuation point of view?
Well, if you look at our portfolios, you'll see conglomerates. In other words, companies that have their fingers in a number of pies are pretty high on the list of what we have. Banks are in there because obviously the economy growing at this pace and the banking reform taking place is very, very positive. And the fact that such a big segment of the population is not banked yet, so there's big growth opportunities there. And then the obvious pharmaceuticals, which looks very good, and technology,
Materials as well, given the bullish view you have on commodities, like for instance, Indian steel companies or refiners or oil and gas companies?
On a very selective basis. I wouldn't take an industry-wide view on that because there's so many wrinkles in the individual company's strategy and outlook.
Is there anything that you like uniformly? Is there any more detail you could give us on what kind of companies or investments attract you?
I would say any company that can access the consumer in all levels, the low end, high end, medium, and those companies would be the ones that are very, very interesting for us because per capita incomes are rising. You're getting the lower income groups becoming bankable with bank accounts. With the ID system, you're getting a plethora of new events taking place in the lowest income segments. So I'd say any company that can access that group would be very interesting.
Okay. Yeah. I want to talk a little bit about small caps, because you wrote a very interesting blog, I think last year at some point, early part of 2015 on the opportunity in small stars, I think, as you called
Yes.
it. And some data in that blog caught my attention. They constitute about 27% of the emerging markets market capitalization, 21,000 more small cap companies versus large cap companies. And then you went on to say in that blog that in India, for example, small caps are generally trading at a discount to large caps. Much of this investment money is what we'd call lazy money or passive investment money concentrated in large cap index stocks that are not only more expensive but subject to volatility, etc., etc. Have you been investing in small caps in India?
Yes, we've been doing private equity investing. We focus in the private equity on pre-IPO and pipe deals, companies that are listed that need extra capital. And we've been finding some terrific companies. In fact, just this morning I met with one group that makes cables and oils for lubricants, and they're doing very, very well.
Can you give us some idea of what your exposure to Indian small caps would likely be?
See, we've got about, in our group, emerging markets group, I can only talk about our emerging markets group, 2 billion in India, and I would say maybe 1/3 is small cap.
And that 1/3 is private equity and pipe deals.
A private equity would be very small.
So most of it is pipe deals.
10%. The rest would be, regular listed stocks, portfolio investments.
Correct. What do you typically look for in the small cap companies that you invest in India, both from an opportunity point of view and from a threat point of view? If you can talk us through that, and any specific sectors that you found most interesting in small cap?
India, it's a big country. It's like China. There's so many things going on that you really can't focus on one particular sector. There's so many things you can look at. But the example I just mentioned,
the pipes
the fact
the
that
cables company.
There's so much infrastructure being built now in India. Any company that supplies infrastructure projects will do pretty well. There's a good opportunity. Let's put it that way. What do we look for? We look for good management, number one.
Most important, yeah.
Very important. Companies that are run by people that know their business and are interested in growth, but are also very responsible to their shareholders. So, for example, the company I just mentioned, they're paying out 30% of their earnings of dividends every year. They've been very, very active in capital investment, improving their manufacturing. And they've been expanding overseas. So, I mean, these are the kinds of people we like to deal with, we would like to be invested in.
Okay. And you said 1/3 of $2 billion is invested in small caps. Yeah. Does that 1/3 represent a substantial increase over the last few years? Have you been increasingly investing in small caps?
We have, because we have dedicated small cap funds.
Correct.
And they've been growing. So, we've been putting more money in.
Okay. Speaking of India, there are two controversial issues that I want to talk to you about. One is the changes that India is effecting to the tax treaty with Mauritius. You spoke very, how do I put it, cautiously about it when the news first broke. And I think you said, and if I quote you correctly, you said, "I'm positive on the Indian markets for local investors, but not so much for foreign investors with this tax regime." You still sound very optimistic about India in the last few minutes. Do you really believe that this change in the Mauritius tax treaty is going to dent the ability of foreign investors to invest in India? Because otherwise you've painted a very optimistic picture, and in fact the markets have taken this change in their stride.
It definitely is going to impact a number of investors. It doesn't impact us as much because we are long-term investors. But I would say that, long-term is a very relative thing when you're dealing with open-ended funds. I think there's one thing the government maybe doesn't realize. I mean, we are long-term investors. Our average holding period is 5 years, but we're running open-ended funds. And these open-ended funds sometimes require us to buy one day and sell the next because we have redemptions or whatever coming in. So I would say that if they could eliminate the capital gains tax and replace it with a turnover tax, that would be a much better solution because it's a level playing field. Foreigners, locals, overseas Indians get treated all the same.
Fair enough. Last question. And this is about the governor of the Central Bank of India, which is Raghuram Rajan. If for some reason Raghuram Rajan does not continue after his 3-year term comes to an end, how much of a negative impact do you think that's going to have on the perception of India amongst foreign investors, then do you expect that to have a big impact on India's equity markets?
It will definitely have a negative impact, in my view, but it probably would not be lasting, depending on who they put in that position. If they can put in an equally capable, neutral person, a non-political person, then the impact will not be significant. But I think the initial impact will be probably negative.
All right, Mark, we've come to the end of our questions. Thank you so much for your time, and thank you for speaking with BloombergQuint.
Thank you.
Thank you.